You make it sound like Australia is sort of the loose change down the back of the world financial couch. Hello, Butchery Gamawara from the Gadigal lands here in Sydney. I'm Simon Thomsen and this is...
Majella Campbell.
And it's time for Startup 360. Great to have your company. Hope you're having a fabulous week. If you are on the East Coast, of course, a 4-day working week. How was your King's birthday long weekend?
It was very enjoyable. What did I do?
Pull the dinner up and snoozed.
Yeah, I slept a lot, to be honest. It was good. It was so cold. Again, I feel like I talk about this all the time. But I actually went to a footy game and I've never been so cold in my life.
What kind of footy?
It was rugby league, so it wasn't the good kind, but that's okay.
No, that's all right. Well, which team?
It was just a Norths Bears game. They had
the Bears, the mighty Perth Bears.
Yes, as it is now. Yeah.
Yes.
They had a beer festival and a wine festival or something on, so I thought I'd go check it out, and it was a good time. It was fun.
So beer and wine with blokes running into each other, that sounds like a pretty good combination. I do, given it was the King's birthday weekend, and that means there's a new round of Australian honours. One of the things that surprises me is that we have to get better, I think, in the technology and startup sector in dobbing people in. I mean, depending on how you feel about Scott Morrison, the point is that someone nominated him. Someone put together his track record, and the committee, the Australian Honours Committee, looked at it and said, yep, that's fine, here's your gong.
Yeah.
We need to do that. We need to have a coordinated effort to recognise people who are doing good things in this sector so that they do get on that list. There was about 850 awards on Monday, and the sector was nowhere to be seen. And I think that, again, that's something, there's some great scientists and other people in there, but we need to pull our fingers out and do this like it was a funding round.
Absolutely. I didn't even think about that. That's such an important point. Far more advocacy all around. I think we don't do a very good job of it.
And it's very simple. Unfortunately, we don't have the knighthoods anymore that Tony Abbott once put in, so you can't be Lady Majella. As much as that would sound quite good. Dame Majella, that would be it.
Sir Simon, sounds great.
Sir Simon, yes, all of those. But, ACs, AOs, or even OAMs for services to this sector, and there have been a lot of people doing it well for a long time, something we should have a crack at.
Absolutely.
But before we have a crack at our stories of the week, let's talk about who we've got coming on the show today. First guest, David Tuckwell from ETF Shares, which is a new fintech that's just come out. Apparently it's the first one in a couple of years. Came through the Macquarie University Incubator. He's pulled it together in 6 months. Of course, his dad has a pretty impressive track record in this front, but I'm looking forward to having a chat with him about that. And our second guest for 10X, our 10 rapid fire questions this week, is Peter Cole from Court Aid AI. Not a first-time founder. I actually had him on the Startup Daily Show a couple of years ago when he was putting together another startup for growing vegetables in your backyard. Oh. And that's still going in Marrickville, in Sydney's inner west, and we'll talk to him about that and everything else. But what a week. The big news, the one that caught my eye, of course, is Glitch Capital, which I love the name. I thought that was quite funny.
I love it. I think it's great. I think it's really good to see the emergence of more growth stage venture funds and, really funding that 2 to 10 mil gap that we often see a lot of startups having to go elsewhere to get. So that's awesome.
And to tell you the story, people like a cloud guru, Sam Cronenberg, GoOne's Andrew Barnes, and around about a dozen other founders of tech companies that have reached unicorn status, $1 billion valuations, have backed a new $50 million early stage venture capital fund, or not early stage, a little bit later.
Yeah, growth.
Because the idea is you'll have 1 mil to 10 mil in revenue. You're kind of getting to that scaling point. AconX's Lee Jasper and Rob Philpott have put the band back together for this fund. Of course, Lee's got his finger in a heck of a lot of pies, from his own startup Firmable to Second Quarter Ventures to chairing LaunchVic. He's one of the gods. There you go. So Lee Jasper, that sounds quite good, doesn't it?
Absolutely.
Guys, we've got to get our stuff together on this one and start putting some good people in to recognise these awards. But the LPs include people from Employment Hero, Leonardo AI, Pet Circle, Nira, Zella, Who Gives a Crap, me and you. So it's the founders coming back, having had some successful exits or done well, who are reinvesting in this, because I think the number was something like 70% of the funds came from this group of around about 50 experienced founders, and then another 30 from the management team. to put 50 mil altogether. And of course, what they're promising to bring to the table is their own experience, the BTDT of founder life for that. So I think that's really cool, isn't it?
I think that's great, and I think it's really important to have that like investor insight and that almost that empathy as well to be able to really drive that. I think that's going to be a really great edge that they'll bring to the table.
I think because LaunchVic has that great 30 by 30 program where they're developing startups at the point where they need to scale up and get their house in order when it comes to the executive teams and all that stuff going on. I think it'll be a really nice complement to that down in Victoria too.
I think so.
One of the other ones, of course, and I was a little bit surprised, it had been bubbling along on the YouTubes, but our old mate and former AFL player for the Melbourne Demons, Joel McDonald, is back from GetSwift. Now, for people who are unfamiliar with this story, this was a startup that began as Liquor Run around about 10 years ago, and McDonald and his other co-founder, Bain Hunter, pivoted into a bigger company called GetSwift, which was all about software logistics, listed on the ASX, and the whole thing imploded. And around about 100 mil worth of investor funding raised while the company was on the ASX disappeared. It ended up in a long court case, ended up in a separate class action where investors got about 1 cent in the dollar, I think it was. And there was a rather scathing judgment at the time from Justice Michael Lee, who you may know from the Bruce Lerman case and a few other prominent legal actions. Elaine Stead, sort of defamation hearing, was heard in front of Justice Lee. It's just a bit of trivia. We do a startup trivia night with judges. But the interesting thing about that is he's come back as kind of like a life coach influencer. Have you watched it?
I read the article. I saw a few things on it, and that's such a wild rebrand. That's a whole new level of interesting.
Some of it makes kind of sense in that he's talking to founders about, look, I was down the bottom of the ladder, I was getting smashed and I was doing drugs and I was miserable and, ideation, the whole thing, which I can imagine. When you get smashed pretty hard in the court, when your business is lost, you lose your direction, and you have to figure out how to rebuild. And he talks about that. He talks, mind you, his big advice is get your testosterone levels checked if you're over 35 and a bloke. So I don't know if you need your estrogen checked to see how you're tracking and whether you can be a successful founder, but that was his key message.
Very well-rounded.
And that changed everything, apparently. And then, of course, a bit of sunlight, a bit of exercise, get off the grog, see someone about your mental health. And so he's doing the rebuild thing. But I have to say, watching the 23 minutes, I didn't see any particular remorse, which was something that the judge noted in his adjudication, because the guy was fined, I think, $1 million, banned from being a company director in Australia for 12 years. The company itself disappeared to the Canada Stock Exchange, where, again, its value vanished. And I kind of think there's an old children's story that I used to love about a bear teaching his son to ride a bike, and Dad would crash the bike, and every time he'd get up from this massive stack, he'd say to the son, "Now, son, this is what you shouldn't do." And I kind of feel like Joel's giving off big, "Now, son, this is what you shouldn't do" vibes, but I'm not sure he's quite positioning it like that.
No, and it's kind of seems, there was like the money side to it too. It's quite an expensive course, is it not? Or is it came straight with the money to it, right?
I didn't see that.
Okay.
I haven't clicked on that. And I didn't click on anything, actually, aside from
I could be wrong. That could be, I thought I saw that, but don't take that with any. It kind of felt like it was another opportunity. And I think the remorse part really comes back to it. And to me, I think if you were doing it from that angle of being like, I've learned something, I want to help others, it wouldn't feel like it was in the course of like that angle. I think that you'd probably just go out there and be doing the work first instead of presenting it out to the public. I don't know. That's just my take. There's
a wild moment in the whole conversation that I want to talk about where he's kind of like, his idea is that the universe is trying to send you a message, when bad things keep happening to you. His advice is, don't be a victim, but it kind of sounds like the way he positions it, he was a victim of investors who didn't understand what was going on. He was so ahead of the market that they didn't understand. And, everything was, the regulators were wrong, the companies who were clients were wrong. What he says in chapter 3 of the video, titled The Rebuild, he talks about his biggest demons and asks, what did I do to attract this? What do I need to fix? What do I need to learn from? How do I fix my mistakes and avoid those mistakes? And then he says, this was the ultimate MBA, but he doesn't kind of really go into that. He talks about, visualizing and realizing your mind, because the body takes signals from the brain. So it's kind of like it's a little bit Anthony Robbins' hot coals is my impression of this discussion.
Sounds like he needs more signals to his brain and take some accountability. That's kind of what I think.
I would probably listen to advice from some external critics, maybe. But anyway, you've got to have good founder belief. I know that's really, really important.
Without a doubt.
But sometimes the universe is trying to send you a message that you fucked up. And
I think
you probably should admit that somewhere along the way.
I think it's the consequence of your own actions. It's not the universe at some point. At some point, it's like, yeah, I made a mistake, I fucked up, and I have to own that.
Yeah. He says, if you keep playing victim and not learning the lessons, the universe is just going to send you more and more people until you wake the fuck up and learn the lesson, and then you can level up, he says.
Very wise.
Yeah.
Very wise.
The one other one, of course, speaking of fuck-ups, is our good friends at Strong Room. Creditors met the last week and decided to wind the company up. Based on, there's been a deed of company arrangement attempt by one of the early stage investors and one of the founders involved. They were putting some money on the table and sort of said, we'd like to do this, but it would kind of stop some of the other investigations and litigation. So the administrators didn't like that. They recommended to go with another offer that is on the table and wind the company up, because then that gives them the ability for the liquidator to dig deeper and find out what the heck went on, because, as the administrator said, they had a sense that the company was trading while insolvent back in, I think it was the third quarter of 2024. Yeah. That means that there's a possibility they could recoup more money. And, of course, the freezing order from EVP is still in place. But there were more legal skirmishes over the last couple of weeks, and I get the feeling that they will keep happening. I have these notifications set up, and it keeps going ping, ping, ping every time more documents are filed. I know that the statement of claim has been lodged by EVP and the defendants, and there are now 30 defendants in this case, 30 plus defendants, because EVP has added all the other investors to the list as well. Artesian, Boab, they're Intervalley, they're all in there. In this case, as defendants with this freezing order. So we'll see how this unfolds in the coming weeks. I think they've got about a month to respond, and then the matter is going to go back on about August 21.
Right.
More popcorn. Not going to talk about Trump and Elon. No. Have you got anything to say, aside from the fact that this is why Schadenfreude was invented?
I have no airtime to give to those two. So no.
But, men are just so emotional. We shouldn't put them in charge of business, because they just lose it. They let their emotions run away with themselves.
It's dangerous stuff. You really keep them away.
We're going to take a quick break, compose ourselves, and we'll be right back with our first guest, David Tuckwell. Welcome back to Startup 360, which is supported by Vanta, helping startups unlock market opportunities through automated compliance. I'm Simon Majella, and we're joined by David Tuckwell, the founder of the recently launched startup, fintech, ETF Shares. I keep wanting to say EFT, but it's ETF, which means Exchange Traded Funds. And I'm going to start with that question. Great to have you here, David. What is an Exchange Traded Fund?
Oh, thanks a lot for having me. And a lot of people say EFT. I think it's because the alphabet is EFG.
So well, no, because us less sophisticated investors have been doing electronically fund transfers for years.
To be fair, for the first couple of minutes, I thought we were talking about that when I first researched, and I realised it was something different. So that probably says something about my financial ability.
No.
We're just poor people, that's all. But here's someone who knows what he's talking about to explain it.
Hopefully I know what I'm talking about. So an ETF is essentially just a fund. If you think of a superannuation fund, a managed fund, any other kind of fund, so a pool of regulated investment capital that you can buy and sell on an exchange like you do shares. Mm-hmm. So that's it. So take the way a share like the Commonwealth Banks or BHP's trades, but make it a fund instead of just one company. There's a basket of them. That's it.
So I'm kind of just buying like a grocery box of shares.
That's exactly right. That's a really good way to describe it, yes.
And then do I buy in and out of that particular fund, which may go up and down, or does it do the shares trade inside it? Or how does it all work after that? Let's say I've got $1,000 and I'm going to hand it over to you guys, and we'll get to the company in a second. But what happens next?
That's exactly right. So if you think of it like a shopping basket, to borrow your analogy, and say I've got an ETF which has two shares in it, the Commonwealth Banks and the BHPs.
Yeah.
So you'd wake up one morning, you'd log on to your brokerage account. Let's say you've got a CommSec account or some other bank's broker account. You'd buy an ETF in the same way that you would the Commonwealth Bank's shares. And while the ETF is trading throughout the day from 10 to 4, the shares inside it are also often trading, if it's an Australian ETF at least. So yes, the value of the ETF will move up and down based on the value of the Commonwealth Bank's shares and BHP's shares at the same time.
So do we find in that case, your funds sitting on the ASX, or is that where they are, or do we go straight to you and you deal with it individually?
They're on exchange. So you just log into your brokerage account, should you have one. I assume you may have one.
I do. I mainly look at them for reporting rather than investing.
Yeah, fair enough. Yeah.
That's as far as I get.
Understandable. And you just log in and you type in the ticker of the ETF you're looking for in the same way you'd type in CBA or BHP, and off you go.
Cool.
Interesting.
All right. Now, one of the things when we covered this story the other week is that you're the first player in Australia in something like 30 years. Is that right? Tell us what's going on and why is this taking so long?
It's been over a decade. There's a number of interesting facts here. Firstly, we've got one of the most concentrated ETF markets in the world. There's only 5 companies here that actively provide them. The US has over 100 such companies. The UK has over 30, and I could go on. Why are there so few here? The answer, there's a lot of reasons for this. The first is if you're a financial giant on Wall Street or in London or Hong Kong, Australia is just an irrelevant backwater that you don't really wake up in the morning and think about it all. I mean, there's that unfortunate fact. There's then the fact that it's a little bit different here to other financial centres like London or Wall Street. In London or Wall Street, if you're building ETFs, you sell them to hedge funds, pension funds, these really big bad guys who can put a lot of money into your ETF and make you very rich very quickly. Whereas the rules of the road here in Australia are, it's mums and dads, it's high street financial advisors, it's your local friendly stockbroker, and these aren't the types of people that are by and large going to stick, hundreds of millions or billions of dollars in your fund straight away. So that's less interesting to these powerful global financial institutions that have said no to providing ETFs here in Australia. Where I think we're a little bit different as a firm is we are Australian, so we respect Australia and the Australian market. And we're also willing to play by the rules of the road here. So talk to mums and dads, talk to high street financial advisors in the way that, these large investment banks whose names you'd know aren't really willing to do.
You make it sound like Australia is sort of the loose change down the back of the world financial couch.
That's exactly what it is. Yeah.
That's a brilliant analogy.
Yeah, we don't see it that way.
Yeah.
An investment bank based out of Switzerland, out of London or out of Wall Street does see it that way. And that's just how it is.
Well, there's a little bit of sobering for the day.
There we go. Put us right back. So previously you were working at Global X, which is another fund, a big one, based out of New York. I'd love to know what sort of made you want to go out on your own and change up the game.
That's right. So myself and my co-founder, Cliff Mann, he's our CEO, we were both part of the management team at Global X. I managed the product strategy and research function. Cliff managed the portfolio management function, which controls all the money. Why we wanted to go out on our own, it sort of ties back into what we were discussing about Australia being very important in our view. So while Australia might be loose change down the back of the back of your pants, it's growing. The ETF industry here is growing at 31% a year. It's one of the fastest growing in the world because Australians have learned to love exchange-traded funds, and they're right for doing so in our view. So we thought, well, why can't Australia have a vibrant, rich, sophisticated and diverse ETF market in the same way that the United States does or the same way that London does? So it's really just about wanting to make international trends in finance come to our local shores.
Now, we often talk about in the startup sector the bank of mum and dad being one of your early investors. you have the bank of Dad in a very specific way, and I'm going to let you tell the story because, of course, he knows a little bit about this sector.
Yep, you're exactly right. There's those old 3 Fs about when you start a business: friends, family, and fools being the ones that first back you. We're no different in that regard. We've got a major family member, hopefully he's not a fool, in my dad, who's...
He's fine. His bank account suggests he's far from it.
Yeah, well, hopefully. He's backing the business. He's a bit of an unusual case in that he was one of the founders of the global ETF industry. And he originally founded ETF Securities, which he then sold to Mirai, actually. But he wanted to get back in the game, so he backed us to start up. And that's been absolutely crucial for us, not only his experience, but also for the regulatory capital purposes. So financial services is a highly regulated industry. It's a bit different to, say, technology. You can't just go and start a funds management business and go sell funds to mums and dads. No. There's a licensing process you have to go through with the regulator, with ASIC. And one of the things that ASIC wants to see is that you've got adequate capital to meet your regulatory capital obligations, which goes up to about $5 million. So it's not a joke or not something you smirk at. So yeah, he's also been absolutely crucial for that as well.
I want to ask about that relationship and growing up, because the old joke is normally you head in the opposite direction. I think I've done a reasonable job as a father. Neither of my children want to go anywhere near journalism, but here you are following in your dad's footsteps. Tell us about that experience of watching it. Did it excite you and think he's an opportunity? Because he was a pioneer, an entrepreneur, someone carving out a new market, new ground at a time when everyone's going, what is this?
You're exactly right. And I think that comes down to no one really knows what the future holds. So when Dad started building the business in 2002, I was a teenager. I had no idea, neither did he, neither did anyone, that ETFs were going to be a $15 trillion global industry in 20 years' time. Yeah, that determines asset prices day to day. And so I was sitting there as a teenager, often with his quite strong encouragement to learn certain things about finance and learn certain things about ETFs. He did everything himself. He wrote the prospectuses and the other legal literature himself. He sold the products himself. He did everything and anything with his own hands. And so I would sit there sometimes in some moments as his little assistant, learning, very luckily for me, as the world would turn out, about all these sort of advanced legal and finance concepts with no knowledge that this would become a multi-trillion-dollar global industry. So I'm very grateful to my father for the occasionally firm parental hand that sort of steered me in this industry. And yeah, when you're a teenager, you've got children yourself, you know what it can be like, the relationship between teenagers and parents. But I wasn't really grateful for it at the time, I'm sorry to say. But, looking back on it now in my late 30s, it's, I'm very grateful for what he did for me now. Yeah.
And before you got into, I guess, the finance industry, you previously also dabbled in journalism. Yeah,
journalism's the best job in the world. I congratulate you guys for doing it. It's so much fun, and it's so important as well. I don't think there's any other profession that is as enjoyable and is as much fun as journalism. I don't know, you guys could give me your opinions as well, perhaps.
I'm getting credit as a journalist right now.
Exactly,
cool.
enjoy that. It's certainly enormously enjoyable. Profitable's a separate thing, and there are people who are paid a lot of money on the C-suites in major media companies who can't figure out how to make it profitable right now either. And the cost of labour is one of the things that they're trying their best to drive down. Not here at Pinstripe, of course. We're all just rolling around in gold. You can ask our producer over there. He's like laughing as he counts his money, even as we record. But look, it's a great job. But I'm going to focus on you. Tell us your ambitions. I mean, you just said 15 trillion.
Yes, that's right.
Is the ETF market nowadays. So how big a slice of that pie are you going to have in 10 years?
Well, it's 15 trillion US, so in Aussie it's over 20 trillion.
Yeah.
Our local market here is a small slice of that at this stage, but a very fast-growing one and influential one. We believe that the Australian ETF market is going to be worth about $1 trillion on its current trajectory at the beginning of next decade. If we can get a very, very small slice of that, like 1%, even less, then we'll be laughing. So, fast-growing market. If we can take a small portion of it, even the smallest, we'll be very happy.
And in terms of your, I suppose, like working in such a highly regulated industry as a startup, how are you making sure you're balancing that sense of innovation and that new sense of coming into it in a new way while managing that really high compliance side?
Yeah, that's a fantastic question. So there's definitely a balance that needs to be struck between wanting to be innovative and build a new kind of ETF, a new kind of fund, and also having to observe relevant laws, legislations, and compliance frameworks. And it's something that everyone takes very, very, very seriously. So if you're looking to build a new novel ETF, your application with the exchange goes straight to ASIC's desk for their review. And it's a good thing that it is that way, because the last thing you do want is a family somewhere in Australia putting their life savings into a fund, which you can easily do, including one of ours, and then the whole thing just blows up and implodes. So
sounds almost like crypto.
Yeah, there's definitely been some of that in crypto, and I think that's one of the reasons that we've seen regulators globally in Australia and elsewhere take it slow with crypto, because they don't want that kind of scenario occurring. And there has been a big push to launch some kinds of other crypto ETFs aside from Bitcoin and Ethereum, and I think part of the reason we are getting that pushback is that exact concern. They don't want a kind of, what was it called, Luna?
Yes,
believe it was.
Luna.
Yep. They don't want, say, a lunar ETF that someone puts a lot of money into and then it explodes and then a lot of people get badly hurt. So yeah, it is something that we're always working through with the exchanges, with the regulators, with our compliance people to ensure that that balance is struck.
A couple of things around what you're doing. You focused on the US market, and I want to drill down a little bit into that because I think one of them is like the top 100 US companies, and then there's another one, the 10 largest NASDAQ listed companies. Maybe Atlassian will be in there one of these days, you never know, or even Canva. But I'm interested in why that market, going back to what you were saying before, is that because we're seeing a lot of new stockbrokers coming out nowadays, online brokerage firms who are giving people access to the US market, but that's generally around individual stocks. Some of them are doing sort of the marginal thing. Why the US market?
So the US stock market has performed better than pretty much anywhere in the world, including Australia, over the past 5 and 10 years. So to answer your question bluntly, you make more money, or you have made more money the past 5 or 10 years if you go the US route rather than the Australian route. There is still strong benefits to staying at home with Australian shares and Australian investments. So franking credits, for instance, are a very Australian thing, and you don't get that anywhere else. And for a lot of retirees, for instance, having those tax rebates are just essential to their livelihoods. So there is still a logic for staying home, but the base of the fact is that, the US stocks have done better, and so there's more demand as a result. And that's one of the reasons that we're focusing there.
It's one of those things Scott Galloway talks about, that the US has created more wealth through its markets than anywhere else in the world over the last several decades. It is an extraordinary story.
And I have to ask, so it's been rumoured your family mantra was a bit of bloody discipline, or something. You had quite an upbringing that was really about like no sleep-ins, getting out, getting in the open. Has that sort of mindset continued on, or is that something that you're using continuing as a founder these days? There's
certainly a lot of that. That's broadly accurate. The discipline starts at home, and parental love is discipline. I'd say there's definitely a lot of truth to that. I think in a business as at home, you do need to keep things disciplined if you're trying to build a scalable institution, whether it's an army, a company, or even a media outlet. There has to be certain rules that everyone follows. There has to be certain lanes that people swim in, and so on and so forth. But I don't view it negatively myself. I think, so to give a bit of an example, I think when you're a teenage boy, for instance, you need your parents as authority figures most of the times to save you from your own worst impulses. I know you mentioned sleeping in, video games, maybe staying up late and watching Netflix. And without that sort of parental guardrail, in my opinion, young men can turn into perhaps not as nice adults. So it's a tough lesson to learn, I think. I certainly didn't fully appreciate this until I became a parent myself, that discipline is love, essentially, when you're a child, and your parents want what's best for you better than anyone else. And yeah, that's sometimes just tough love is what love ultimately is. That's how I see it. I don't know about you guys.
There's also, yeah, absolutely agree. And it's that tough part of parenting. But I want to talk about generous love, because the other part that impresses me, especially with my son down at ANU, is the Tuckwell Scholarship Program. $100 million to help kids go through university down there. Talk a little bit about philanthropy, why it's important to the family, and what values your dad instilled in being successful and giving back.
Sure. So my father grew up in a working class family in Canberra. He was the first, well, his brother and sister did as well, but his generation were the first to go to university. And that was only made possible really because of Gough Whitlam's social mobility programs. The political trajectory Australia's been on the past 20 years, there's less and less funding that's going directly to students, and it's fallen to private individuals to sort of fill the void. So I think that's where it comes from fundamentally. It's my father experiencing what education did for his own social mobility and for his own life journey, and then wanting to give that back to others and to other people. And yeah, that's where it comes from, I think.
It is pretty cool, because I was one of those beneficiaries of Whitlam and Free University back in the 80s, and I look at the HECS bill my son is getting now, and it's a big challenge. But in terms of access to education, something like a scholarship program is really important. I've seen a few founders now aligning themselves with universities and being incredibly generous in terms of supporting what they want to achieve. I want to ask you, what do you want to achieve for your kids?
For my kids, I'd like them to grow up a combination of two things. Humble. I've sort of experienced going through various private schools that wealth can sort of spoil children, and I don't want that for my children. I don't think any parent wants that for their children. But I also want them to be, strong and able to face the world, because, family's obviously loving and nurturing, but when you're out there facing the market, I think startup founders understand this almost better than anyone. In fact, the real world can be a bit of a cold, hard place. So I also want them to be strong enough to face that, to stand on their own 2 feet, and to not have to, wait for mummy and daddy to come round to, help you out or save you, essentially. So that's what I'm looking for with my own kids.
And I should ask, actually, what's Graham like as a grandfather?
Very good. He's he's a lot kinder, I think, as a grandfather than he was as a father.
That's where you get the leave pass. You just get to be good granddad after time.
Work's done.
Yeah, that's it. Yeah, as kinder as a grandfather, I think it's fair. But that's all grandparents, I think, too.
Grandparents, great.
Yeah.
I want to ask a similar question, but what's on the horizon for the startup? Where do you want to take things?
Yep. So at the moment, we're all hands on deck trying to meet a lot of financial advisors and a lot of stockbrokers. So advisors in particular are the ones that drive the industry, and there's over 10,000 of them around the country, and they've just never heard of us at this stage in our journey because we've only been live for really several weeks. So it's a lot of crunching the phones, a lot of sending emails, a lot of crunching the concrete as well. But we'll get there, and we'll take it day by day to just steadily build up our phone books and build up our email lists, and hopefully get to know us better and provide something for them that they don't already have.
Well, great to have you on the show today, David. I'm going to teach my kids a little bit about it by giving them the bit of money they're getting back from the startup investment I put in for them. They're getting some of it back. Not the whole thing, but I'm going to say, let's give ETFs a go next time round. See how they go. So you could make my children incredibly wealthy, something they won't get from their father. Great to have you on the show.
Thanks so much for having me, guys.
We'll be right back with 10X.
Welcome back to Startup 360. We are joined here with Peter Kolb, founder of CourtAid AI. It's great to have you here.
Thank you so much for having me.
Love to kick off. Can we get a little bit of a rundown on CourtAI and what it's all about?
Yeah, so our CourtAid, you can check it out at CourtAid.
Sorry.
Yeah.
CourtAid.ai.
Yeah. Effectively, it's an easy-to-use law research platform. We started coding back in end of 2023, and then we launched May 2024. And as of date, we have 14,000 users. We pretty much have judgments and legislation daily updated of the court hearings, so you can easily check certain situations, what's happened in certain situations, find relevant legislation extremely easily in Australia, New Zealand, and as of 2 months ago, the UK market.
That was just the warm-up. You get the first question, I reckon.
First question. So can you tell us a little bit about why you started Court Aid in particular? What was sparked the flame?
Yeah, no, really, really good question. So this is my second company, both still running. My other company, Gavra, we ended up in a weird situation back in 2023 where we had a lease on a commercial warehouse, and it was a shared co-leased tenancy situation. And one of the co-tenants decided to stop paying rent, and it ended up being a huge headache. And we ended up going to NCAT several times it took about 4 months. You end up building these huge NCAT files of all the comms, what's happened, the situation. Ended up having 3 NCAT hearings. And
Just explain to people what NCAT is.
So in New South Wales, it's effectively the tribunals, which will deal with a lot of the lower cases before
Going to court.
Yeah, going to court. And they typically deal with most things. But after 3 hearings, the judge ruled that they couldn't even make a ruling on it because it was a commercial lease and would have to deal with the Supreme Court situation. And the frustration was huge. And it was, if there was something available at the time that would have allowed me to research and figure out the best cause of action and realize that NCAT in the situation wasn't the best cause of action, I could have saved 4 months. And so I met up with one of my friends, who's now a co-founder of Court Aid, who has 7 years in experience of building enterprise search systems, and pretty much the frustration radiating from me at that point was bundled into how do we solve this for everyone. And that's where Court Aid came from.
I'm fascinated by this because, of course, one of the things that's happening with AI at the moment is lawyers are using it to imagine, they're putting in submissions that have imaginary citations in them. And anyone who's seen a legal document, judges go through, here they cite all the other cases that have set precedent along the way, and you can get up with a very long list. And it's an important part of legal argument. Did you see that opportunity in part because of the hallucinations that were going on in AI and saying we can do this in a better way with clearer, cleaner data so that you can trust it as a lawyer rather than sort of saying, I'm sorry, Your Honour, I didn't check my homework?
Yeah, definitely. It was seen as an opportunity. So it's about making sure everything that comes back is referenced, and it's referenced back to the original judgment or the original legislation, and then you can deep dive into each citation separately, and it will auto highlight sections of the judgment or legislation that it believes is relevant to your question. So we effectively built that into the platform to be able to check those citations.
And as a second-time founder, what's the kind of difference between the two? Has it been a bit of a smoother journey this time, or still as bumpy?
I feel like you're always learning, no matter what. So my first company, Gavra, is in the hardware space, sustainability space. So that was a lot more electronic design, marketing and sales on that side. Hardware and software are very, very different, where hardware, for example, you want to prototype something, manufacture it, you're looking at least 18 months lead time, manufacturers with China, you're building out tooling. Software's a lot quicker. You can iterate quickly and get feedback and then change it up very, very quickly. For example, we're currently working with Landers and Rogers at the Law Tech Hub, which is fantastic because they'll give us feedback on our product and a pilot solution that we're working with them on. And then every week we'll be iterating on the product, and then eventually we'll push all those changes to our main product. While in the hardware space, I mean, it'll be 18 months before a product hits market for you to work out what to change. So it's a lot quicker, the second time around. There's a lot of learnings from the first time, which is along marketing and sales, which are being able to bundle into CourtAid, which is how we've managed to scale it to like 14,000 users in a 12-month cycle, which is really exciting. And that's purely based off knowing how to run marketing funnels, which is all things I've learned from my first startup.
So Gather was all about growing produce, whether commercially or at home. So what's the difference between a vegetable and a lawyer?
Good question.
No, it's not. It's a silly one.
I'll rephrase that in terms of what's the difference between a lawyer and, say, a farmer or a customer, and to two very, very different customer bases. It's funny because Gather is more around the hobbies, and people are doing things. It's a relaxing hobby, while the customer base for a law tech company is very frantic with problems that impacting their lives and they need solutions for. So two very, very different markets. One's a lot more particular and frantic, and you have to get it right all the time. The others are a bit more relaxed in the sense of, logistics are taking a bit longer. I'm happy to wait a bit longer for like shipments along that line. So two very, very different customer bases.
I was just going to hope you was going to say there are times when blueberries cost more than a lawyer.
Especially these days. I'm actually going to ask a bit of a random question. So I've been reading a lot of books lately. One of your ones that you recommended a couple weeks ago, 10 out of 10. What's your favourite founder book that you like to read?
That's such a good question. And I've got so many. My go-to, there's a podcast, and they've also turned it into a book, which was How I Built This, is really good, which I highly recommend. There's another one called Play Bigger, which is also very good. It's about how to create like an environment where you're turning an event into effectively like a launch for your own business, which is really good. There's one more that will come to me a bit later, which I really like, but I'm forgetting the title.
Oh, that's all right. I mean, you asked for one, you've got two, and
I keep them going. I'm writing them down. I'm reading them all.
Totally. This is you're being a journalist right now. You're picking his brains for ideas. Mate, I do want to ask, because I know this is a B2B sales business in terms of what you're doing with CourtAid, but what's something everyone mistakes or gets wrong about their understanding of going to court?
Interesting. The complexity of it. So I think the best thing from like a lawyer's perspective, like experienced lawyer, will be don't go to court. It's about...
Excellent advice.
It's about doing all the things to stop that, because it's extremely expensive and extremely time consuming. So if you have the information, which CourtAid can assist with, where you know what might happen in certain situations, you can find ways to stop. Like, court should be definitely the last place you want to be. So it's weird because it's a law tech company which assists with like law research, but really it should be helping people stop going to court. So don't is my answer to that.
That is excellent advice.
Great advice.
Especially anyone
Legal
who just
advice.
thinks it's all about William Shatner and James Spader sitting around drinking whiskey on a balcony. It's nothing like that.
No Harvey Specters here. 14,000 users in how many months did you say?
12 months. We went live May last year. Before then, I was running some trials with some lawyer friends, getting feedback and such not. And then we pretty much hit the trigger on advertising platforms, Google, Meta, Reddit, a lot of memes to try and get get people. It's really interesting because we're also a Microsoft startup as well, which is a fantastic program for any founders watching that want to build something in the tech space, because they give you a lot of credits and a lot of support. They say that the AI and the change in AI that's happening in industry right now is actually happening bottom up, while most tech changes happen top down, where it's the CEO, CTO that will suggest a change for organization and then force it out. But it's the people doing the legwork that are actually looking for these solutions to make their lives easier, and then that radiates throughout the organization. So the concept in terms of the go-to-market concept for us was to try and take some B2C concepts on marketing, which is the Reddit, the Meta, the Google ads, to try and get people that are more in the paralegal space that are actually doing the work that can start using the tools, and if they're finding it useful, then radiate that up and get the larger contracts.
That's such an interesting insight. I was going to ask in particular, I mean, I didn't even, now that you put it like that, that's so obvious and that's so interesting, and I feel like not really brought out enough. I was going to ask though as well, what's the biggest challenge to scaling or growing quickly like that? That's a lot of growth in a little bit of time. What's been the biggest hurdles?
We're a small team, so concentration is like myself. My co-founder is a senior developer, so he's extremely good on the tools, but covering marketing and sales and product direction for a small team where you're trying to scale it, is we're bootstrapped as well. So we've taken no outside funding, which means your resources are extremely constrained, and you have to be very targeted. Like, for example, we launched in the UK maybe like 2 months ago, but we haven't quite got the marketing messaging correct there yet. So the conversions in the UK aren't as good as Australia. So the question is, why push as hard in the UK? Maybe we should double down on the Australian market, which is working a lot better. So you have to make decisions like that, because you can build, one thing I like to say is you can build anything, but you can't build everything. So knowing what to build is really, really important, which is also why we're excited to be part of the Law Tech Hub with Rogers and Landers, is the feedback that we constantly get of what we should be focusing on.
I'm going to say that was question 7, A and B, rather than sort of question 8, just so we can squeeze 3 more in. But I'm going to pick up on that particular issue. Landers and Rogers, the Law Tech Hub, been going for a few years now. Courtney does a great job. It's very niche, very specialist. What would your advice be to other founders around going into an accelerator? What's the value?
It depends what you want out of the accelerator. So we're very particular, because myself and my co-founder have not come from law backgrounds, is we need to be walking and living law with our customers, and partnering up with law firms like that is really important for us for the iteration of the product. Other people have approached the accelerator as an opportunity to show off and connect with investors in that sense, where they already have a law background and they know what they're building, but it's about the connection and the prestige, and then the connection to potential investors outside the accelerator. So you really have to identify what you want out of it to work out if it's a good fit for yourself. And I think that's the same for most accelerators. I think that's
cool.
That's great. And before you mentioned that you're bootstrapped, is that something you're actively deciding to stay bootstrapped, or are you looking to go?
It is good to stay bootstrapped as long as possible. It does make you think a lot more lean and make a more efficient business long term. If we do run into a situation where we believe that where we have a gap and we know exactly where we need to be, and we know that we need X amount of money to get there, say, for example, expansion to the US market or things like that, which may be on the roadmap but not for a little bit longer, then it would make sense. It only makes sense to go for invested money if you have the exact timeline and what you want to achieve with that money at that point. But considering that we've managed to stay bootstrapped and profitable from effectively the last 12 months pretty consistently, we haven't needed to.
See, if you're
I love
profitable,
that.
you don't need the
I
money.
love that. I'm all for that.
Okay, final question. You are an AI business. What's the lesson you've learnt, the most important one about AI that other founders need to know?
It's actually insanely interesting when you think about the playing field of AI right now. And when you're talking about these AI businesses, everyone, including the big boys, are using the same models. Like, they're all using OpenAI. No one has access to 300,000 GPUs to train a whole new model, except for the big end of town. So which means it ends up becoming a even playing field in that sense, where suddenly a small company like myself have access to the same resources these big enterprise players have, which means we can build products just as good as the big enterprise players. So I think there's going to be a huge shift in startups coming through and competing with the enterprise players. Because before it used to be how many developers do you have, or how big your workforce is, but AI has suddenly lowered that playing field and made a lot more even on that regard. And then the second is that no one really has their own specific model. It's about what you do around the model. So you can compete would be my sort of feedback on that space. I feel like you can suddenly compete in this age with people with a lot more money than you and a lot more resources.
That's
Awesome. Peter Cole, great to have you on the show. Thank you for taking part in 10X. We wish you all the best with Court Aid. Look forward to Landers and Rogers' graduation, because they throw a good party too, I have to say.
Fantastic. Thank you so much for having me, guys.
That is all we have time for on Startup 360. This show is a Pinstripe Media production, produced and edited by the fabulous Matt Jackson, who deserves lots more money. Thanks to Ella Walsh, who also does, James Vass, Vanta for their support, and to Majella and Fishburners. Always great to do this with you. Don't forget to subscribe to the show on Apple, Spotify, and YouTube. And, of course, startupdaily.net. Oh, the big news, I almost forgot.
Can't forget.
My gosh, this week we've launched the Startup Daily Best in Tech Awards.
Yay.
Entries are open now. Head to startupdaily.net. Get them in. We're open for 3 weeks. I think the start of July, we're going to close them off. And then we're going to have a fabulous party a little later on. You'll be star of the show at that, I'm sure. But have a great week. We'll see you next Friday.